Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, Thursday, May 27th. Good morning. Let's kick off with our regular Thursday morning commentator sitting in Germany, Carol Nachli, CEO of Crystal Energy. Carol, the story continues to be a little bit about accommodating Iranian oil. We were not expecting ultimately for OPEC to acknowledge this, but we did have comments overnight by the Russian minister ultimately stating the obvious point that Iranian oil will have to be accommodated in OPEC plus strategy. And of course, they meet again on Monday.
Good morning, Sean. Good morning, everyone. Well, indeed, I mean, we cannot ignore the discussions about Iranian oil coming back to the market, nor can OPEC turn a blind eye on such an important producer within the group. However, it would be really naive. I keep on thinking about Iranian history with sanctions. So for me, it would be naive to think that no Iranian oil or hardly any Iranian oil and barrels have been getting through the market despite the sanctions, because when you have such a history of being exposed to sanctions, this goes back to decades, not just only these, what we are more familiar with, the more recent history, then you should find a way to maneuver around those sanctions. So already the Iranian oil are out there, of course, not maybe at full capacity, but the question is when they will hit the market. So OPEC definitely will keep an eye on that, and they will accommodate any potential return in Iranian oil to the market visibly, at least, but they are not really worried about it because at the moment, because we have to wait for, first of all, for the deal to be signed and for that oil to start getting to the market. And mind you, if the oil starts to get in the market by the summer, let's say August, for example, or September, then I think the demand will be growing more than what we have today, and it will be able to absorb this increase in capacity, assuming that you don't have like miracles happening elsewhere and more oil, big quantities coming to the market. So on balance, yes, you should acknowledge, but it's not something that OPEC would be sitting worrying about it all night.
Frank Kane, senior columnist with the Arab News. It's nice to see that you're back in your house there, Frank. I see you've changed the chandelier, which is nice. I think that one is a better one.
Well, thanks,
it does complement.
Like
yeah, I thought that would be probably bought in China nonetheless, but, at a good price, I'm sure. But Frank, the position in Saudi Arabia as we sit another few days away from this OPEC meeting, the Iran story lingering in the background or maybe in the foreground, should we at least consider the possibility that we could have any kind of an OPEC surprise next week?
Sean, the chandelier comes from the lobby of the Ritz-Carlton Hotel in Riyadh, which is where I'm speaking to you from, where I attended an event yesterday. And it's nice to be back here, I've got to say. But
it's nice to know that events are back in action in Riyadh.
Well, precisely. This is the first time the Ritz-Carlton has accommodated anything of any substance for about 15 months, I'm told.
It's accommodated a few things in the past, but not a conference for a while.
Well, this fabled hotel, you know.
Forever famous for different reasons, but nonetheless, back to OPEC.
So OPEC, I'm heading over to the Energy Ministry a bit later on today, so I'll probably be rather better briefed then. But from conversations this morning, it seems as though they're quite sanguine about the prospect of more Iranian oil coming on. They think that there is enough demand out there to absorb that, a million barrels or so. I also get there's a feeling that they want to bring Iran back into the OPEC fold, the OPEC plus fold as well. They've been outside the quotas for a long time now. So if there is a deal done on the nuclear, then that will pave the way for negotiations to bring them fully back into the quotas arrangement. So that's how I think they're thinking at the moment. But I don't think there will be a surprise, because the idea is that whatever pent-up demand there is out there can absorb what Iranian oil comes back on.
Daniel Richards, senior MENA economist at Emirates MBD in Dubai. Daniel, reading your Emirates MBD note this morning, I was sort of taken back a little bit, not just by, I suppose, something we don't consider that often, but France business consumer confidence rebounding in May is the lead note in your daily commentary. I suppose European economic recovery is very supportive to the macro global picture.
Yeah, of course. And there were, of course, these worries about Europe over the past several months. They really lagged in terms of vaccination rollout. But I think that's really starting to see that pick up pace over the last couple of months or so. And that's really in tune with the rolling back of restrictions inevitably. And as you mentioned, as we led with this morning, a real pickup in both business and consumer confidence in France. As we look ahead to the summer, when hopefully as these vaccination programs continue at pace and as restrictions continue to be rolled back, then that should be supportive, as you say, of the global economy generally, given the size and importance of the Eurozone as a whole.
Carol, China making some headlines this week in, again, their attempts to control the economy's progress there. We've seen the story we have in the digest today about forcing financial institutions to stop selling commodity-linked products to retail buyers, again, sort of feeding into that somewhat speculative frenzy in China. But one of the other notable things, I think, that in China that I was reading this morning is China's manufacturers absorbing a lot of the inflation of the commodity prices that we're all reading about in the world and have for some time now. But actually, a lot of that isn't passing through to the end user as China exports all of its endless products, because the Chinese manufacturers are absorbing a lot of that cost at this time, that cost inflation. What's your outlook for that? Can the Chinese continue to absorb that kind of inflated raw material prices and not pass it on to the rest of us?
Yeah, well, it all depends. You see, we cannot look at China in isolation of the rest of the world because, as you said, Sean, it's an export-driven economy. So we have to see also what is going on elsewhere, the pace at which, for example, the global economy is going to recover, the key markets for Chinese exports, what is happening there. I mean, I know that North America is one of them, but Europe is another one. So is, other areas, including the many developing countries. So the status of the Chinese economy does not only depend on what is happening inside China, but what is also happening elsewhere. Mind you, Sean, before the pandemic hit, there were also concerns about the potential growth of Chinese economy. And if I'm not mistaken, for the first time in the 14th five-year annual plan, the Chinese government did not specify a growth target for the Chinese economy. It kept it quite open. And that was quite a diversion from what they had before, which means they also had some doubts about the outlook for the economy in the coming years. It doesn't mean it's going to slow down and it's going to go into a major reversal of what we saw, but it's not going to maintain the growth that we saw, for example, in the years preceding the pandemic. But definitely in terms of inflation, the Chinese perhaps were more concerned or the first to be concerned than other countries, including in the US, because they were the first to maybe come out of that pandemic. But lots of uncertainty still linger around the growth of the economy, as long as there are uncertainties elsewhere as well.
Well, that point, just to come back to it, in China, the ability to absorb the higher cost raw material commodities that go into so many things, that same issue will be resonating in many parts of the world. The idea that as companies come out of this lockdown economic posture and reopen their doors, whatever doors that might be, how much are they going to burden the customer with the elevated price point, or are companies and restaurants and airlines going to swallow some of those elevated extra costs?
Well, it's not just how much they can shift on the consumer, but how much the consumer can take. So it's a kind of dynamic picture. It's not a static whereby one thing increase at time and the other factor doesn't react. So if that translates into higher costs, that is going to affect negatively, for example, the growth in demand. So if prices for traveling increase tremendously, we're looking at flights back to the UK recently, and it was shocking to see that prices with decent airlines were around 32 euros, and that you wouldn't have guessed. So it's still far from, causing a worry onto consumers. But I would also bring another dimension that may not be relevant, perhaps for our short-term discussion, but I would also bring the government role into perspective. That also the government, for example, if they're going to squeeze more revenues out of the companies, where would that impact might be converted into higher prices? But that will taper the demand, and that can affect negatively or derail economic recovery if that becomes really a substantial burden on consumers. But we're not there yet.
It does appear to be one of those potential supply bottlenecks. If I'm a manufacturer of X and I cannot, the raw material costs are so high, my margins are next to zero, I'm not going to meet that extra order of 100 lamps because I'm not going to make any money doing it. There's going to be some bottlenecks coming into this equation. But let's get back to that beautiful chandelier in Riyadh. Frank, really surprising story out of Holland overnight, where a Dutch court ruled that Shell must reduce its CO2 emissions by 45% by 2030. That is 5 years earlier than the International Oil Company was planning to do so. But it does put a sort of point in the direction as to where these pressure points are coming from.
You mean on climate change action?
Yes,
sure. And
you're not going to be developing another oil field, and I think it brings a lot of expectation back to the likes of Saudi Aramco and others to meet that shortfall.
Yes, they will for sure, and they can produce it a lot more cheaply as well, can't they?
You're not going to get a court in Riyadh saying, sorry, Aramco, you've got to cut back there.
No, you won't, for sure. But, Aramco has to abide by international regulations and laws as well, doesn't it? If it's supplying product to Europe or the US, it still has to obey those laws. So it will have to take cognizance of this, of course, won't it? Exxon, too, had some setbacks yesterday, didn't they, in the climate change campaign, with activists put on the board against their will. So there is a tide, isn't there? For what it's worth, the Saudis are certainly aware of this, and they are paying a lot of attention to aspects of climate change and the need to rein in emissions. They certainly are paying attention to it, but there is this argument between them and the Europeans in particular about what action you take against climate change. The Saudis think that their idea of the circular carbon economy will do it for us by 2050. That will get us to net zero if it is sufficiently applied. Europe doesn't agree, I don't think, and many in North America don't agree either. So there is a kind of falling out here in the.
One has to sort of put into the consideration from a simply selfish markets point of view, and from an OPEC perspective, that if indeed the courts now join the activists in accelerating the transition. While oil demand remains robust, so there's going to have to be a lot of money spent in different places to develop extra capacity that won't be coming from these majors. Let's go back to sitting in Dubai as to where we are looking at the moment with Daniel. Daniel, also see in your note this morning, you picked up on the Federal Reserve policymakers have started to acknowledge that we are closer to debating when to pull back some of their crisis. So we're starting to talk about talking or consider about considering. It's sort of that early doors of this terrible, uncomfortable subject of weaning everybody off this very generous bottle of milk.
Yeah, precisely. So it's just a few weeks ago, we had Jerome Powell saying it wasn't the time to be discussing this. But since then, of course, we've had that very high inflation print that came in at 4.2% compared to expectations of 3.6%. But the other data still be quite mixed. The NFP report was quite weak retail sales. So it's not guaranteed, which is why they're still kind of hedging their bets. But certainly in the last few days, we've had Richard Clarida, we've had Quales, we've had a few different Fed officials, as you mentioned, start to acknowledge that perhaps the time is coming to start discuss doing this. And it's going to have to come at some point, but they're certainly going to try and manage it as best they can, avoid a repetition of the kind of jumps in yields that we saw in 2013, the so-called taper tantrum. That's what they want to avoid, but it's a tricky situation to do. And equally, the Fed has come out, they changed their policy in the middle of last year. They do want to target full employment. They're happy for inflation to run a bit hot to achieve that. They keep saying inflation is transitory, but now they're moving the language about what exactly transitory means. It's not just 1 or 2 months, it could be a few months, but certainly is that a debate is going to be more and more prevalent over the next few FOMC meetings, and indeed ECB and Bank of England as well, and all over the world.
On that point, Carol, we saw in Ireland also overnight the government finally pointed to where their stimulus program is going to come to an end in the second half of the year. While it was meant to expire in the middle of the year, they did extend it a few months, but ultimately pointed towards its end, i.e. all of the sort of welfare payments that they're paying to sort of workers who are not working and so forth. And that's right across Europe. We also had overnight a very dramatic hearings in the British government regarding the sort of failures of policy. Another piece of this post-COVID, everybody hanging out their dirty laundry, blame game starting. So these are some of the sort of cold shower of the new dawn as we come out of COVID. You're losing your welfare and you're going to start fighting who to blame each other.
Yeah, you're going to hear more about this blame game and lots of scoring points against, for example, your opponent, or in the case of the UK, to take a revenge from a former boss. But whether that is going to have any substantial impact on, apart from making headline news, I doubt it. I mean, you could see in the UK, for example, the last election results that we saw, how the Conservatives was there under the leadership of Johnson, even though the people knew about what was going on. So we're going to hear about a lot of these noises to make headlines, but I don't think it's going to make a substantial structure.
Well, I would contest that, because I do think it is indicative of where the politics is going to go. I mean, every country is going to have a version of having to maintain policy. You're going to have to rebuild economies. You're going to need political consensus to do so. If you have a lot of infighting, it's going to make things a lot more difficult.
Yeah, but you have to be careful here. I mean, politicians, they think a lot about the short term, the immediate term. They don't think too much far ahead, with all due respect to all politicians. And here we have to distinguish between scoring political points and achieving, a sustainable economic policies. These two, perhaps they may, of course, influence each other, but they may not necessarily drive each other. And in the UK, you have already what we saw, the latest economic data, that the economy is recovering, is doing a good job, especially that there's a vaccination rollout. I mean, remember that last year, the UK was lagging its European peers. Everybody was pointing the finger at the UK for its mismanagement of the crisis. But today, the UK is well ahead of most of the European peers in that respect. So things can change overnight. The situation is pretty fluid. But overall, the longer term direction, we are in a recovery. It may slow down a little bit, but we are there. COVID-19, hopefully, I'm really praying. I hope this is not just a wishful thinking. It's going to be something of the past. It has structural structural damage to the economy that we're going to see over the coming months and years. But I don't think we're going to expect anything derailing in the short term, apart from this blame game. And mind you, Sean, something came to my mind today that only last week or 2 weeks ago, we're only talking about India. Right? It was everywhere in all the headline news. Where is India today? Nobody's talking about what's going on in India, not because COVID-19 was over, but because people realized that maybe it was not as a big problem to cause a derailing of the global economic recovery.
Well, it's certainly a big story that's still in our digest, and I think in India is still a big issue. But Frank, as a close watcher of British politics, former Fleet Street correspondent, Dominic Cummings yesterday declaring that decisions made recklessly by the current Prime Minister and Health Minister caused thousands of lives lost that otherwise would not be lost. Is that jargon, rhetoric? Is there consequence, do you think? Where does that go?
It's certainly a big story in UK terms, isn't it? And may have repercussions. But look, I mean, Cummings was at the heart of these decisions as well, wasn't he? And now he's blaming everybody else for actions that he was part of.
I mean, he did acknowledge his own role in it, just to give him that recognition. But yeah, he was at the center of it.
I wouldn't give him too much recognition for anything, to be honest, because he has played a nefarious role in all this himself. But I tend to agree with Carol there, because these are really the kind of inner infighting of the British political classes, aren't they? They may have electoral repercussions.
They will have. I mean, you look at Carol sitting in Germany. The Greens are set to do incredibly well in the elections come September, to a great extent, at least according to the reporting, because the current government has mismanaged COVID.
But just a point there, Sean. Boris Johnson recently, came back with a big resurgence in local elections, despite all the mud that's being thrown around. He has 80+ majority in the House of Commons. He can virtually do what he likes for the next 3 years. He will have to do something seriously bad to, face some kind of serious leadership threat here, I think.
Daniel, your report again noted that the S&P ratings agency had identified an aggregate budget deficit in the GCC to decline to about $80 billion this year. That's down from $143 billion last year. These are big numbers for these relatively small Gulf economies to absorb. What is the outlook for that sort of fiscal balance returning?
Yeah, so obviously things are hopefully looking a lot better this year. The oil price, we're not going to see risk crashes again like we had last year. And also, of course, as we start to see a tapering off of those production curves, and we'll have the benefit of both ends, more going out for a higher price. So hopefully that should give a little more fiscal breathing space to these economies. All the same as last year, where we didn't really have those big fiscal responses within the region as we had elsewhere, notably the US, of course, huge, and Japan, other massive fiscal responses. We still don't really expect that to come in this year. Things aren't going to be that rosy, but it does make their positions just a little bit more secure than perhaps they were over the last 12 months. And for some of those smaller economies, especially, then that will be some welcome breathing space, I think.
If you take some of the sort of austerity measures that were brought in during this cycle, unlike other places we've just talked about where a lot of generous stimulus came, the Saudis, for example, triple VAT overnight, Daniel, is there any chance that will be rewound, or should we expect that to become permanent?
I guess for the time being, they'll keep it in place. It's certainly beneficial to their books, and I guess we'll look to see what kind of how the kind of consumer demand's really playing out as we get over these anomalies of the past several months of loosening of restrictions. If it still seems suppressed after that point, then I guess they might look to roll it back. 15% does seem a bit high given what it was previously, but for the time being, I'd expect that it will remain in place, especially as that initial inflationary boost goes through the base as well.
We've also seen, Daniel, just lastly, quickly, some riots or demonstrations in Oman based on the austerity that's come in there. That's always the sort of threat of social unrest. Does that have legs, do you think?
Well, I mean, hopefully not, but let's see. I mean, last year has been hard for many people, and obviously in poorer countries of the region than Oman, that will be a flashpoint compared to other more wealthy ones. But everybody hopes that these things quieten down, and especially as Oman has struggled over the last several months with renewed lockdowns, closing borders. Hopefully, we start to see these kind of issues fade away, not only here but around the world, and look forward to a brighter second half of this year, I hope.
Carol, your thoughts on that? Obviously, coming from Lebanon in particular, it's through a very, very difficult year for multiple reasons, but the region as a whole absorbing this period of shock to oil revenue and a macroeconomic impact, your outlook for their recovery in this region?
Yeah, I mean, Lebanon, I would leave it out of the equation.
Yeah.
Because they are in a pretty unique situation whereby I say they were exposed to the oil curse long before they make any discovery. But for the region as a whole, I mean, again, it's compared to what we are comparing it. So compared to last year, I think everybody's doing great compared to last year. But again, if I look at it before the pandemic, the region was not doing great because it is still exposed to changes in oil prices. And oil prices since 2014 have been in a lower oil price band than what we saw before 2014. So that's something to remember. And the region was hit pretty hard, the major oil producers, because unlike, for example, many other economies, or if I look at the world average, they entered the crisis on a weak footing. So they were already struggling with their economic growth because of their dependence on oil revenues. That said, today, the recovery in oil prices is definitely helping these economies. But again, Sean, we have to distinguish between short-term impact and long-term sustainability. So as long as we have this major dependence on oil revenues, you will have this kind of pro-cyclical fiscal policies of government, and that is not healthy. So whenever prices recover, we see things going well. Whenever prices go down, we see the economy suffering. Yes, people talk about some economic diversification, but it's really pretty meager compared to what we ideally would like to see the region. But it's definitely doing better than in many other developing countries. If you think of African countries, some places in Latin America. So it's all relative compared to what you are comparing it with in terms of time frame, but they can do much better.
Let's get the survey question in before we run out of time. Again, it's coming back to the question I asked Carol about earlier. Chinese industry is absorbing significant cost pressures from rising commodity prices, dampening the inflationary impact for the rest of the world. Will this Chinese gift last through 2021? Ultimately, if the Chinese are absorbing a lot of this inflation as the manufacturing hub of the world, that obviously keeps the pressure off the Fed and other central bankers. How long will that gift last? That's the question. Will it last through this year at least? Welcome the view. Let's give Frank the last word today. Frank, I welcome your thoughts on some of those questions. We're seeing oil prices today, basically little movement, stuck around that 68 on Brent, where they've been for the last essentially 3 months. It hit 65, 66 on Brent 3 months ago. It stayed there. Your thoughts on the comfort of Saudi Arabia, where you're sitting, and other major Arab Gulf producers, happy with those prices, willing to, continue to sort of target that?
Yes, I think so, Sean. I've said several times before on this show, I think they're happy between 60 and 70, maybe 60, 65 is better for them because it keeps shale out. There is no great expectation that they'll go massively above that, is there? I mean, I see Goldman Sachs are now rowing their view back in to some degree. But just on what Daniel mentioned before, the VAT, the Crown Prince has said here that he will look at ways to reduce that back down, and there certainly is a confidence here that they've kind of got through this, both in terms of how they've managed OPEC and oil prices, and how they've managed the economy. The IMF gave them a hugely positive report a couple of weeks ago, saying that Vision 2030 had helped them get through the pandemic, and everything was really quite glowing. So there is a confidence that they've almost got through, and they're at the other end almost.
On that point, Frank, I mean, we talked a little earlier there with Daniel about the issuance of debt. We're seeing, because the oil price revenue has been obviously subdued and collapsed last year and is back to a kind of a pre-COVID level, but still, We have major fiscal deficits of $80 billion this year in the GCC. So there's a huge borrowing initiative. We're seeing reports of $50 billion a year of GCC debt issuance. This is kind of unprecedented numbers. We're in a new era for this region. Your thoughts on the outlook for that? Is there appetite for that debt? Can it continue to grow? Can they sustain it?
There's certainly an appetite to issue more, but they feel that they're well within the kind of boundaries, and it is low by global standards. Is there an appetite in the rest of the world to take up this debt? Yes, you would have to say that there has been on past showing. So the feeling here, I mean, I haven't been to Saudi Arabia now for 15 months, and just from being here 48 hours, the feeling is much more optimistic than I thought from the outside, I have to say.
And is there, just on that sort of anecdotal note, is there many other foreigners around? Is it open back to business meetings and so on?
I'm here for a one-off event. The UN have opened their Middle East regional office for the World Tourism Organization in Riyadh, and they were having a summit here at the Ritz-Carlton yesterday. So there were lots of people flown in for this, and it was quite a significant crowd. The traffic in Riyadh is, as you would expect, it's virtually normal. So things are almost back to where they were, I think, in early 2020.
Well, there's certainly no shortage of time to get to reach all of the great economic targets that have been set out in Vision 2030. Every day will count in order to achieve it. Let's just wrap up with the survey question result and see what the view in the room is. Will this Chinese gift last through 2021? By a short majority, no. That's I think it's one thing to bear in mind as we go forward, how much both China and everyone else who is in the business of setting prices on anything will absorb the extra costs before passing it on to consumers and into the inflationary indexes and things that the federal and central bank governors will have to take into consideration. But here we are closing out the Middle East week with Brent crude oil trading a little bit down, 68.41. It seems we'll be another week where it doesn't cross 70 again, and we're stuck in this range. It seems to be a sweet spot for everybody. But listen, thank you, Daniel, for joining us. Really appreciate it. Frank, thank you for giving us a tour of your new house. And Carol, hopefully you'll get some chandeliers like Frank has, and you'll get all those builders into your place in Germany. Have a great...
They find it. That's why I'm here, finally.
Have a great weekend. We'll catch up with everybody next week on Sunday. We got John Defterios actually back on air this Sunday, so with Christoph. So we should have a good week in review, and we look forward to that. All the best. Thank you.
Bye-bye.
Thanks. Bye.